Hey guys, Toby Mathis here, and today we're going to be talking about getting ready for the 2021 tax season. So that means filing the 2021 tax return, so it's 2022. So let's dive in to broad categories and make sure that we're giving you some very good, easy to use golden rules. So number one, if you like this type of information, make sure that you're hitting subscribe and like and clicking that little bell so that you get notified when we put out more content, because this stuff is quite often timely, especially with Congress doing what it's doing constantly. But let's dive into this. There's really two categories of people. There's category of people that need refunds and are entitled to refunds, and they're kind of in that first category. And then there's everybody else. I tend to deal with investors. I tend to deal with folks that make a lot of money, and they tend to be in the second category. So if I'm putting in two categories, it's the people that need to get their money right away, and then there's everybody else. And so I'm going to hit the people that are the everybody else first, the folks that are probably going to be owing money, or at a minimum they're not getting anything back. And if I'm speaking to you and you're in this category, then I'll make it really, really simple. File an extension. The reason you file extensions is because it gives you time to make decisions that you close the door on if you file early. Now, I know there's people that no matter what, they always feel like they have to get their tax return done on April 15th. The way it works in the United States is your taxes are due by April 15th. It's a pay as you go. So if you're working for an employer, they're doing withholding. If you're self-employed, you're doing quarterlies. And there's some safe harbors. For example, if you pay 110% of your taxes, you can avoid penalties and things like that of your previous year tax return. But just for ease of understanding, let's just say it's April 15th. If it's on a holiday, or the weekend, then it's the next day. So I think this year it's probably April 17th. But whatever the case, that's when your taxes are due for payment. Your tax return gets an automatic extension. And that goes for corporations, it goes for partnerships, and it goes for individuals, it goes for everybody. You get an automatic extension. In the case of individuals, it's 6 months, which means your tax return technically is not due until October 15th. So make sure that you get that extension if you can. It's really important because if you file, then things like contributing to a SEP, contributing to a 401k or the company contribution, can't do those anymore. HSAs, IRAs, all those things are time sensitive anyway. That's going to be April 15th, but you don't want to file ahead of time and mess yourself up. Or if something changes, you're going to be forced to do an amendment. So for example, if you're a real estate investor and you file because, hey, I feel pressure to file for whatever reason, or maybe you have a loan or something like that, where they're requiring, hey, I need to get your tax return. But then you realize that you have the ability to do, a bonus depreciation on a piece of property or do a cost seg on a piece of property. And you have actually up until the return is due plus extensions. At a minimum, you're having to go back in and do an extension. Whereas if you just could somehow delay the filing, even if you prepared a return and said, this is what I'm going to file, and say yes, before you file, it gives you the ability to make changes later if it's in your best interest or if numbers change. So I'm old enough to remember when they started reporting the basis on option trades, and they screwed it up. Everybody made the same mistakes. All these brokerage houses were goofing up the numbers. And so people were attaching erroneous numbers to their returns and filing. And then the tax forms were being reissued, the 1099s, things like that. There's nothing worse than you file a tax return based off of one set of numbers, and then somebody comes back later, whether it be a K1 or a 1099 or something, and says, or even a W2, and says, oops, I made a mistake. It's actually this. Because now you're going to have to do the amendment, or you could be looking at minimum, you're going to get a correspondence audit because your numbers don't match. They don't match what somebody else is saying. Hey, this is what I paid Toby. I said I paid Toby $100,000 and Toby reported that I was only 90. They're going to say those numbers don't match up. These two forms do not match up. It's not even that they're looking at your return saying you did anything wrong. It's just that they know that there's erroneous information being reported because somebody else reported something else. They're probably getting kicked out and being questioned as well. So I tend to be real general about this. File the extension, give yourself that extra time. Make sure you pay your taxes when they're due. So make sure your taxes are done by April 15th, or that the taxes are paid, whatever you believe the amount is owed. I could even have the return done. I could have my prepare say, like, you know what, prepare it. I need to know what I'm going to owe. Here's what I write the check in. Great. But I don't want to file that return yet, just in case something changes over the summer. I'll give you another example. Somebody, I remember this like yesterday because the client was adamant that they've never been late on a tax return. I always file my taxes on time, they kept saying. And they had an S Corp that filed a return on March 15th. So great. We filed the corp that return on March 15th, and they just kept, they were adamant about it. The problem is they misjudged their numbers. They had a little more profit than they realized. They had a little more income on their individual than they realized. And so they filed a return, and over the summer, they said, well, we have some liquidity here. We have some cash. Can we fund the 401k? Can the corporation put money and match portion of my salary and lower the total tax bill? Because those S corporations flow through. So if the company, which can put 25% of whatever your wages are up to a limitation, could put money into your retirement account, it's a deduction. And the answer would have been yes, had they not filed that return. And I said, unfortunately, the answer is yes, we could do it, but because you filed that tax return, the answer is now no. So we don't want to close those doors. You want to be able to look and give yourself a little bit of breathing room to look back on your financials. And also because, let's be real, every year during that first half of the year, you don't know how it's going to go. Like, you have an idea, this is what I project, but lots of things can happen. You have pandemics and other things where it's like all of a sudden, wait a second, my income's really low this year. Last year, I was thinking it was going to be about the same. Maybe I do some maneuvers, cost seg. Maybe I'm contributing more to a retirement plan. Maybe there's things that I'm doing that can push that income into into this year where I'm not doing so hot and out of those higher tax brackets from the previous year. We never know. It's just nice to have that flexibility. We close the door on that flexibility if we file too early. So you're getting some advice here that you're probably not used to receiving, which is file that extension. This is no different than the teacher in high school says, you have homework and it's due on Friday. But if you really want to, you can turn it in a week later, right? You're looking at it like, hey, wait a second. It's due on Friday, but if I want to, it's next Friday. Like, I could have a whole other week, or maybe it's, hey, it's due on Friday, but you could turn it in on Monday if you'd really rather. I get an entire extra weekend to work on it. I'm going to say no. I'm going to rush to get it in on Friday, and I'm going to do my work, which could be rushed work, not as accurate, as opposed to, let's take a look. Maybe it's written by Friday, and then I take a look at it over the weekend. I do a little more research, or I have it edited, or I have somebody else look at it. Like, that's what the tax scenario is. But for some reason, there's people that just are adamant about that April 15th deadline, because in their minds, it's not only that the taxes are due, but also that return is due. And that's not the case. All right, let's go to the second category. The second category of people is those that are entitled to refunds. Now, if this is you want to file as quickly as possible to get your money as quickly as possible. I'm okay taking the risk that you may have to do an amendment because it puts the money in my pocket. I believe, depending on the refund amount, that money, and if you have a use for it, is probably going to generate more than it would ever cost you to do an amendment, right? It's like, let's get that dollars in our pocket. Let's say you have a $20,000 or $30,000 refund. I want that back. Even a $2,000 or $3,000 refund, it may be more important to you to avoid any extra costs or penalties, or maybe it's, hey, I paid down a credit card that has a high interest. It can end up having a pretty big effect on you. So let's get that money in our pocket. And I'm going to give you guys 5 rules. Realistically, 5 rules. And number 1 is e-file. What's been going on since the pandemic is that the IRS is undermanned and they're way behind. We were talking about long waits, months, half a year plus on paper filings. I'm not saying that they're not going to get to people that paper file. It's just expect delays. So e-file. Make sure you're e-filing. That's number one. Number two, don't ask for a check. Direct deposit. Make sure that you have an account number that you can give the IRS so that they direct deposit. You don't want to be waiting for them to issue checks to get you your refund. So number two is make sure that it is direct deposited. Number three, and this is going to apply to any return, but number three is make sure that the forms that you are receiving from other folks, like your employer is going to give you a W-2, your mortgage might be a 1098, you might be giving a 1099 dividend, you might be getting a 1099 INT, you might be getting a 1099 miscellaneous if you're a gig worker, or whatever the case, if you have 1099 income, make sure that it's being reported accurately on your return and that you're getting them all. Look at your last year's return if you need to and say, what forms do I expect to receive? K1s from your investments. Make sure that they're collected and that they match what's on that K1 is reflected on your return. So whatever the document is, and by the way, this year, Venmo, Zelle, GoFundMe, PayPal, all of those folks are reporting transactions over $600. This is the first year they're doing that. So there's a lot of you who are used to receiving some monies and maybe you think it's cash, not reported. Make sure that it's there. If you have cryptocurrency, I just don't know. I think Coinbase and some of these others are sharing information. Make sure that you're reporting it. Because if you buy something with crypto, what you did is you sold the crypto and then you bought the item. That's actually a taxable transaction. It's no different. Or if you changed Cardano for Bitcoin or whatnot, that is the sale of Cardano and the purchase of Bitcoin. And those are capital assets. So it's no different than buying and selling stock. It's a taxable transaction. Make sure that matches. Number four, if you have the child care credit, the advanced child credit, tax credit, make sure that those kids that you received advance on, or if you're getting the tax credit, because remember there was 6 months of advance, make sure that those kids are not reporting themselves as a dependent or that somebody else is not reporting them as a dependent, because you will lose your tax credit. More importantly, is your e-file will be rejected when you try to file if they've reported themselves as somebody else's dependent or they reported themselves as a dependent. You want to make sure that it's on your return that they're a dependent and nobody else's. So if you have ex-spouse, be clearly talking to them. The IRS is sending out letters saying, here's what we reported. You may, depending on the scenario, you may have been receiving the tax credit, which is just cash. It's literally a refundable tax credit, which means you offsets your tax bill. And if you have more tax credit than bill, since it's refundable, they give you the difference. So they're advancing you $3,000 per child, $3,600 if they're under 6. They're advancing you half of that money, so you're entitled to the other half. So the people that find themselves in hot water are the ones that don't qualify because maybe they're splitting years as to who gets to claim as a dependent. And all of a sudden they've been receiving monies because the IRS said, hey, let's look at 2020 tax return. Oh, you had these 3 dependents and we're going to give you this money and you're not entitled to it. So make sure that you're checking that out, make sure that matches. And if you do have somebody, make sure that they're not claiming themselves as a dependent. And then the last one, number 5, is be first. Be first is a simple way of saying the IRS has been getting backed up. So make sure that you are filing your tax return now as best as you can. So so just make sure that you're following these 5 simple rules. I just call them 5 golden rules if you're expecting a refund. So again, if you are not expecting a refund, I tend to say file that extension. If you are expecting a refund, then you want to get that cash in your hands as quickly as possible. See how it works? You owe them money. Wait. Do everything you can. Give yourself every possibility to lower the amount that you ultimately pay. On the flip side, if you're owed money, make sure that you get it. I want it now. Get it now. And those are the very simple rules. Hey guys, if you like this type of information or you know anybody that could benefit from it, please hit that subscribe button, hit the like, share it with whomever you want. If you have ideas that you'd like me to hit, or if you have questions you'd like me to hit, by all means, put it into the comment section. Would love to address anything that will help you be a better investor, a better business owner, and keep more of what you earn.